We do have another trade alert, and it is from Josh Brown. Maybe you're surprised by it. I'm not sure. Exxon Mobil?
Yeah, so I have a long-term position in IEO, which are the American natural gas and oil producers. The problem with that ETF, not problem, the thing about that ETF, it's very concentrated into ConocoPhillips, COP. And that's okay. It's a great stock. But Exxon is breaking out right now. We talked about this 2 weeks ago or 3 weeks ago on the show. It was the column that we wrote up for CNBC Pro as best stock in the market. It's now following through. This is exactly the level that I wrote about. As she gets toward this level, you would way rather be long than on the sidelines or, God forbid, short. This is a stock that has not performed in a long time. Give me a longer-term chart than 60 minutes, if you guys don't mind. Thank you. You can see here, third time's a charm. This 120 level has been overhead resistance. I think the sellers are cleaned up. I think there's really no reason for this stock not to be able to break out right here. So I am long personally, not a huge position, not buying it forever, buying it for a trade, but I think it's going to work.
Okay, I'm going to come back to this in just a second. I want to get some breaking news, which is happening right now. Phil LeBeau, tell us what you know.
Scott, we are out here in Palo Alto, California at the Rivian offices, engineering offices, where CEO RJ Scaringe is outlining a number of developments when it comes to autonomous vehicle technology and artificial intelligence. Let me run through a few of these. First of all, Rivian is designing a new chip, designing it itself for autonomous driving. The new autonomous system will incorporate artificial intelligence. This AV system will be built into R2 models that go on sale late next year. The Rivian Autonomy Plus is what the system is called. The price will be $2,500 or $49.99 a month. We'll be talking with RJ Scaringe next hour on the exchange about this development and their decision to design their own chips, Scott. Previously, they were using NVIDIA chips for a lot of their hands-free driving. This time around, they decided to design it themselves. Scott, send it back to you.
All right, interesting move in the stock today. It's down more than 3%. Phil, we'll look forward to your interview. Thank you very much for that report. That's our Phil LeBeau. So let's get back to the Exxon conversation. The headline, Josh Brown buys the stock. It's a new buy. Stock is moving on this conversation and the revelation. You own it, right?
Yeah, we own it. We like the name. We don't own enough of it. And I see us kind of looking at this breakout as a reason to continue to add. I don't want to see it stall up here. I want to see follow through. But it's been doing this and holding. Crude oil is down 5% this week. And that's something to really kind of think about how strong this name is, because even names like the refiners, Marathon, Petroleum, and others, they're not getting the type of follow-through this week because of that. So I think this shows how strong the internals are for a name like Exxon.
Well, you know what's interesting, too. Let's continue to look at the chart, is the comment that Jeffrey Gundlach made to me yesterday following the Fed Chair's news conference about commodities and his outlook there. Let's listen, and we'll continue to watch this, and we'll talk about it on the other side.
I also think commodities broadly have quietly started to rally. If you look at the Bloomberg Commodity Index, it's been rising, and now even its 200-day moving average is rising. And of course, the actual value today is above its 200-day moving average. So for the first time in a long time, I turned positive on commodities broadly last week. So I think a commodity index makes some sense in here.
It's Jeffrey Gundlach. I'll throw it back to you. You're kind of our commodities guy.
Yeah, I really like commodities. Now, playing devil's advocate where we are right now is the commodity index has risen so much because gold and silver have such a high weighting on that. But here's the positive thing. Gold is usually the leading indicator. Gold moves first. You got silver making a move now. Copper follows. I think crude oil, we're in the mid-50s here. That's a great spot to be looking to buy it. We like having commodities in our portfolios. We own some mining names in our main portfolio. We run a mining portfolio. But when you get down to diversified portfolios, talk about 80-20 and a 60-40, having a real asset basket, that's where Gundlach's talking about. You need to fit that into your portfolio, complement the fixed income. If inflation stays high, it's the commodities that are going to be driving it.
It's an important point. Like, the only hedge that you have as an equity investor against the sort of commodity price spike that could really screw up a portfolio, really hit the economic data, is exposure to commodity companies. I'm not a huge fan of having tons of these stocks, but Exxon as an avatar for that theme, swapping out IEO, going to Exxon as a more concentrated way to capitalize on that. And look, you own other things in your portfolio. You own airlines. The airlines will get wrecked if crude has a meaningful bounce out of the mid-50s. They'll get wrecked. The stocks, they'll get wrecked. This is how you hedge that risk.
Create cash flow with midstream energy and others that I know a lot of the team has on their portfolio. But yeah, you can create a basket with cash flow as well.
The reason Exxon Mobil, out of all the energy sectors, because of the diversification. Crude oil's down. Natural gas is above $4. It was up at $5. 2 years ago, it was below $2. In Exxon Mobil, you got natural gas, you got crude oil, you got refining, you got marketing, you got everything. It's your first stop in the energy sector.
All right, so we'll watch that. It is on the move. XOM is.